mortgage interest rates are at a 20-year high, and they could go as high as 8%. And I want to share with you what's going on and exactly where rates are headed. So I just did a quick news search for Google today. Mortgage rate just hit their highest since 2002. Climb above 7%, 22-year high. Here's one, could be as high as 8%. So let me tell you what's actually going on. The average mortgage rate today is 7.37%. This is with Mortgage News Daily. This is their daily index, and that is still below the 50-year average. So it's way higher than it was in the spring, and certainly way higher it was when rates were artificially low, but they are still historically low, even at that amount. And let's just look at another, like Rocket Mortgage, the largest independent mortgage bank. Let's see what they're advertising. And you can see that the average is 7.37, and they're at 7.5%, and that's at a 2-point cost and cost or prepaid interest. So rates are definitely in the sevens. And if you do a down payment assistant loan, I'm going to show you where those are as well. So these are the T-Shack rates. You can see they are in the 8%. So there is some truth to the rates are high and they're in the 8%. But I want to show you a couple things so that if you do need to buy or you want to buy, this could be a great opportunity. When rates go high, it pushes more and more people to the sidelines, and it softens up the sellers, meaning you can get sellers to negotiate easier than you can because there'll be fewer buyers, at least for the short term. And you're talking about the highest and best producing asset over the last 30 years in the United States is real estate. So it's definitely the time to buy, even though that might sound counterintuitive. And here's why. Let me show you what's going to happen historically. I'm going to show you how inflation works. So this is the chart on inflation. And this is going back. This line right here, the little dotted line, that's the 2% target range. And if you notice, going into like 2020, it's probably hard to see in the video, but this is like 2020. You can see inflation not only was low, it went really low and it stayed there. But then after the COVID stimulus hit, and all that money went into circulation, it started to create inflation. You can see it hit as high as 8.9%. But then since then, it's been moderating. This was back in just June. So you can see it's coming down. And so it's definitely headed in the right direction. So now I want to show you historically the way mortgage rates have reacted to inflation. So you can see here's inflation and here's the 30-year fix. And look at how they trend almost exactly the same, right? So as inflation goes up, mortgage rates go up. As inflation comes down, and look how it lags behind a little bit, including we had the recent spike. You can see, yeah, rates went up, but they might have a little bit more to go, but we know this, as inflation comes down, this trend line is going to continue. They're going to go down. So what do you do? So here's what I wanted to really share with you. Number one is that most of you, or many of you, and many of us as Americans, we're in a day and age that we get our news primarily from YouTube and social media. And what you have is a lot of talking heads on YouTube that are not actual analysts. What they are is they're putting out hyperbole or speculation, and they have large audiences, they're influencers, and they're really giving people bad data. All of the people that I follow that are experts, that are actually housing data analysts, looking at the actual data, here's what I can tell you. We have reached a baseline level of demand. Even when interest rates were at 18%, there was a base level of demand in the United States. There is a base level of demand no matter where rates are for housing, and we are there right now. That means demand has nowhere to go but up, and we have too few houses to sell. Even when rates moderate and come down and sellers start being willing to sell, the demand will automatically pick up and absorb those right away. So because of that, it's a great time to buy, but you need to work with somebody that's a trusted advisor. I'm a certified mortgage planner. The reason people come to me is because I am that trusted advisor. People that create wealth, they create wealth because they work with people that can advise them and that they can trust. They don't make their decisions based on what their parents or their uncle or their friends or their employers tell them. The group of people are your people that you love to hang out with. You love them, you enjoy them, you create memories with them, but you do not want them to be your trusted advisor. You need an expert to be your trusted advisor. The other thing to remind is, no matter where rates are at, there are certain fundamental principles of buying a house based on sound financial planning practices in terms of debt ratio and housing payments relative to income in the next 2 to 5 year horizon. And that's exactly what I do for you. So reach out. I can build you a great plan. Don't be concerned about rates going up. They will moderate. And if you are looking to buy right now and an opportunity comes up, give me a call. I'll build you a great plan. Thanks so much and have a great day.